Hello, Matt. How are you?
All good, Mark. Thanks for joining us today. No introduction needed from you. I wanted to catch up with you. You've been sort of traveling. You're in Australia recently at the conference down there. But the big talk of the moment is obviously the Alta Mesa ISR project sold to enCore Energy. Is that a good deal for both of you?
Well, I think it is a great deal for both of us. We're really excited about it because we were able to monetize an asset that was sort of out of our patch. I mean, Texas, in the scheme of the world, isn't far away, but it's far away for us when you look at Utah and Wyoming and even Arizona. But I think it's good for enCore because it provides them an asset in Texas and close to home for them because it's close to Corpus Christi, and they can go ahead and focus on it now where we were not going to be able to focus on it for a few years. So, we're very happy with the transaction. We think we got a fair value for it. And the beauty of it is those funds will fund us for the next 2-3 years without dilution for Energy Fuels and let us put the accelerator down on the uranium and the rare earths front. So, I couldn't be more pleased.
Okay, but you're talking about uranium and rare earths because I think certainly a lot of the feedback we've had was that, oh, is this a signal that Energy Fuels, Mark Chalmers, is more enchanted by the rare earths component? I mean, you're selling the good stuff. The price that you sold this for would suggest that this is some of the good stuff that you're selling off here. Is it true? Are we just going to be rare earths company going forward?
It's absolutely not true. Okay, anyone who knows me, I've been in the uranium business for 46 years and I've got uranium pumping through my veins. I'm absolutely committed to the uranium space now and going forward. It's just one of those transactions that when we looked at our bandwidth and what we could focus on and the regions that we're operating on, we want to do everything that we're focused on 100% or 110%, focus on it, be funded, and get that momentum going now. Not 2 or 3 years from now, when we probably would have been looking at Alta Mesa to start up if uranium prices supported that. So I know some people looked at it and kind of raised their eyebrows, but I'm focused on what's best for the shareholders here, and I know this is a great deal for the shareholders, and that's the way we're rolling. And as I said, when you look at our existing balance sheet and you add this transaction, we're in a great position going forward for the next few years.
Right. Okay. And not only is it South Texas, but I guess it's ISR versus the hard rock stuff that you've got going on elsewhere. So will there be more sales to kind of fund the rare earths component of your growth story, or are we done now?
We have no plans to do further sales. No
Okay.
plans.
Have you
Right
got
now,
plans to do further acquisitions, Mark?
well, look, we're always going to be open for things that make sense, and this transaction made sense for us. The beauty of it is it gets us into positive, we believe, positive cash flow position both on uranium and rare earths. So it gets the flywheel going in a big way. So right now we're in a great shape. As you know, Matt, we have zero debt, and this funds the startup of 2 or 3 mines, all the working capital we need for those mines to start filling contracts that start in 2023, our uranium contracts. It gets a separation plant, what we call phase 1 separation plant, which will be between 2,500 to 5,000 tons of REO. I mean, to put that into context, that's about the size of the Neo plant, probably bigger than the Neo plant. Next year, we plan to have that completed at the end of next year or early in 2024. And we also will have the ability to separate oxides in the United States of America. And we believe we're going to be the first mover doing that commercially. And then on top, we're looking at phase 2, which is to build out or design and engineer and permit a facility that's in the order of Lynas, in the same order of what they currently have capacity to do. So it's exciting. We're busy. The team's working hard, but the team is working smart.
Okay. Right. I get all of the above. It's kind of it's a nice picture you paint. Just in terms of the nuance of the detail, because I want to understand the structure of this of the deal. It's 60 million in cash and 60 million on a secured convertible note, right? So interest bearing as well over 2 year period. I think it's something like 8%. How can we kind of structure it like this? Because it's quite an interesting return on the original investment when you first bought Alta Mesa. I think I can't remember what you paid for it, but it's a nice return on the project. But how did you end up structuring it like this? Why not just all cash or just straight shares?
Yeah, look, it was structured really because this was a big acquisition for enCore, and we were trying to help them to a certain extent. But at the same time, we wanted to help ourselves. I mean, we did this on a way that we had, got a material amount of cash up front. We had the 2-year note and the interest, but we also had this convert option. So yeah, we it was a big lift for him. It was a big lift for him, an important lift. But again, a very, I think it's kind of a company defining acquisition for them. But we just like the whole deal for Energy Fuels, and we like it for enCore.
Yeah, no, so it was amazing. I think it was kind of surprised the market a little bit, in a sense. I mean, if you're looking at some of your bigger institutional shareholders, do you think they kind of get it? Do you think they understand it? They don't look at this as some kind of backward step?
Look, I think most people get it. It did raise a few eyebrows, and I had a number of chats with shareholders. I think the more they think about the use of proceeds and the momentum we're going to get from that, and that it's non-dilutive, I think most of them have decided this is a good deal for Energy Fuels. So as I said, I'm doing this what's good for Energy Fuels and our shareholders. And after 46 years in this business, I would think I have some insight on what's good to advance a company like ours. And so, we're focused on the long haul here. We're not focused on, the share price today or tomorrow. We're focused on where we're going over the next few years.
Right, but you do have a new parallel track here with Energy Fuels, which is kind of, which is the rare earth component, at the heart of which is the White Mesa Mill. So the White Mesa Mill is important for your uranium track, and it's also important for this new rare earth track. So just remind people, if you don't mind, about this kind of phase 1, phase 2 optionality that you've got. Phase 1 is relatively small capex requirement, but kind of gets the ball rolling, utilizing some of the existing infrastructure. And phase 2 is this big step up, and that is where you potentially get to say, well, we could be a Linus type North American focused company. So phase 1, phase 2, if you don't mind explaining those, or reminding people.
Okay, phase 1, we'll do the cracking and leaching in the existing uranium mill, and then we'll build out this separation plant that will recover the NdPr and the SM plus, which is the heavies, basically heavies concentrate. And we'll do that in an existing facility, our SX building. So we're doing phase 1, utilizing a lot of our existing infrastructure now, all right? And that gets us, and we think it's important to stay ahead of the game here, to show people we can do this commercially. It's really world significant outside of China. Phase 2, we will build a complete separate crack and leach facility where we won't use the leach circuit of the White Mesa Mill. We'll have a separate circuit next door, and we'll have a new dedicated solvent extraction circuit that will be in addition to the circuit that we'll have in the existing facility. So it'll probably be in the order of 15,000 tons of REO capacity in the new circuit, but we'll also have maybe up to 5,000 tons of REO in the phase 1 circuit. So in the order of around 20,000 tons REO, which is in about the same order of what Linus has right now.
Which is big. Linus, whatever they are, was it 4 billion, something like that? Can I just talk to you about the White Mesa Mill bit of that, because obviously that phase 1, phase 2 is great, but you've got multiple lines you've got to feed, or potentially can feed, using White Mesa Mill. Lots and lots of questions. I know we've talked about it ad infinitum and multiple occasions, but it's worth going over again for people who've missed it. People are asking, and I'm asking this in the context of a conversation I've had with a kind of, I guess, leading in uranium industry CEO who's been around a while. He's produced uranium. He kind of knows what he's talking about, built mines, right? And he's saying, I'm looking at the North American market. I'm struggling to see, bar one or two exceptions. You're in the exceptional crew there as far as he's concerned. I'm struggling to see how all of these companies get into production because they don't have the skill sets necessary. The assets aren't all that good, and no one's ever built a mine, a uranium mine or facility before. So that's a problem for the US in terms of homegrown uranium. It's also potentially a problem for you if that doesn't happen, because with your mill, your optionality there is you want that feed, you want them to do well, because you want to do either tolling agreements or purchase agreements with them, don't you?
There's two steps for the conventional mill. There's the mining step, and there's the processing step. So on the mining step, that's pretty basic and relatively simple. The mining step for providing conventional ore to the mill. I mean, a lot of the technical risk is on the processing, and we've got that covered. So if you put those two together, and many of the mills in the past, in the 70s, 60s, and 70s in the United States were toll processing facilities. Now we're doing an ore buying schedule. We're not toll processing ore from parties that will sell us.
So no tolling. No tolling at all.
Well, we've got a toll milling agreement with Consolidated Uranium, so that's the only one that we have. If they process ore at the mill, they can toll it. We'll get a margin for that, and then they'll have the product to sell on their own if they elect to. On the purchase agreement, we will buy the material on a formula, and the formula will allow the margin we need to process it, and also make a margin on the whole process, including selling uranium to our account. So they're different. But we're in a unique position because nobody else is in that sort of position pretty much anywhere in the world. And there may be an exception or two, but certainly in the United States with the White Mesa Mill, we're the only ones there. Now, on the topic of people starting up new projects, not just in the United States, but around the world, a lot of them are going to fail. And they're going to fail because of technical risks. They're going to fail because of economics. They don't achieve their projections on their production, costs, whatever. And history tends to repeat it. And my talk I gave down in Australia was, will history repeat? And it will. There will be a number of failures. Now, there will be a few successes, but there'll be more failures than successes.
See, again, conversations that we're having with companies. We were talking to one this morning, which saw between the PEA and the PFS, saw the capex rise by an additional $150 million. It saw their IRR drop from 80% down to 23%. That's a big deal. The rising costs are causing the kind of capex of projects, and I suspect later on the opex of projects, to rise significantly, and margins are getting squeezed. For some companies, it would make sense to look for tolling agreements or purchase agreements rather than go through that kind of capex pain, because the cost of the money is also increasing for companies like that as their risk the risk profile of those companies increases too. So it's a difficult environment in which they're trying to operate, but ultimately we kind of need all this uranium. So hopefully people find a way through this. But they're also going to come against another crunch point, which is if there's a purchasing agreement, they don't really have much negotiation power there, right? It's will be a buyer's market, not a seller's market, I suspect. And the terms by which they can, and the margins that they make in those conversations is going to be difficult too. So, I mean, great for you, but not so good for them. So how does the North America get that balance right, or is that not your problem?
Well, look, for a purchasing agreement, for it to be successful, we want those who are mining to at least make slight margin on the mining step, because the more material they mine, the more material we can process, and the more material we can then sell. It's striking that balance, and it's our goal to strike a balance where it's sustainable. We want sustainable feed, and really, this concept, as I say, it goes back decades. And I've actually, in my early days as a miner, I was supplying ore purchasing agreements to Union Carbide in the 70s. So I've done this before personally. So I think I have a pretty good understanding. So you want the miners to make enough money to break rock, to put it in a truck and ship it to the mill. So then we receive it, and then we process it when we're ready to process it. So you really want a deal that works for everybody, but ultimately we're going to buy material that we can make a profit on. It reduces the risk profile for us because the material gets delivered to the mill. We buy it. We know what our costs of processing are, and we go from there.
And that seems a lot easier than actually going and saying, I need to go and buy a bunch more assets, because then you don't have the mining risk, right? It kind of seems to be the opposite of what in terms of the battery metal space is. You're seeing a lot of battery manufacturers and OEMs kind of moving upstream and taking positions in companies. You're saying that actually with a buying program, you don't have to assume any of that risk. It gets delivered to your front door, and at that point, you know what your margins are going to be. Makes sense, I guess.
Correct. That's correct.
Okay.
So it reduces risk, but at the same time, the people that we buy from, and we're going to be very selective on who we buy from, because whoever we buy from has to be mining in full compliance on every front, with the regulations at their facility. And as I said, we'll be on a formula, on a recovered basis, and we'll just stack up our costs, and then we'll figure out what we can afford to pay, and hopefully what we can afford to pay also provides a margin for those that are supplying us with the ore.
Right, and ultimately you want, and not that White Mesa has ever operated at full capacity, but you want to optimize it as much as possible. So in terms of the amount of uranium ore, because I know the rare earths is a different base. It's going to be much smaller quantities, but much higher margins. But the uranium component, have you got an idea in your head as to how full or what percentage of the kind of processing capability you want to try to achieve?
Well, the White Mesa Mill has a licensed production capacity of 8 million pounds per year. Right. Over 40 years, the maximum it's ever produced is about 4 million pounds in a given year. So, that's why our phase one, with the rare earths, and also going forward with the mining and processing at the White Mesa Mill for uranium, we don't see any bottleneck at this point in time. But when we build the phase two and have these separate crack and leach facility, they'll be completely separate infrastructure. So we'll be trying to push up that capacity both on the rare earths front and the all new facility, and also on the uranium front. So it's a little bit of a juggle at this point in time, but if you go back over 40 years, it's been manageable at that mill.
It's going to be interesting, actually. So there's not many sort of North American uranium companies who are advanced enough to be talking about, extracting ore anytime soon. But they're going to need to get a grip on their economics. And, usually they're talking about spot price, they're talking about term contracts, they're talking about all of these things. But with the context that you're describing, they're going to have to come up with a slightly different set of economics here, because they're not going to be able to capture what they think they're going to capture. So that's going to make it kind of interesting going forward in terms of how you value some of these organizations. Do you think, have you started any conversations with anyone? Has anyone inquired as to what the numbers could look like?
Look, it's early stages there. I have yesterday was talking to one group. Look, it's generally in the order of 50% of the recoverable value. That's generally what it is for the ore to show up at the mill, and then we take it from there. It's in that order, and it could vary. I mean, it depends too, because you have uranium only ores, you have uranium vanadium ores, and in some cases you have very high grade vanadium ores with low uranium. So, to come up with a schedule that captures those different ore feeds, it can vary somewhat. And to process uranium vanadium ores, this is expensive. So, a lot of people underestimate what the cost is of the operating cost of processing. So it's a number of variables, Matt, but yeah, it's generally speaking just around 50% of the recovered value of those elements, uranium and vanadium.
Okay, so they'll save a bit on capex and opex.
Yeah, you're going
to take a little bit of that. You're going to take a little bit of that to process in terms of the ore processing program. You can extract some of that upside yourself. Okay, interesting. I think it's interesting because I say companies are going to have to report differently in terms of these economic studies, and I think perhaps not just the companies, but investors, brokers are going to have to try and understand that a little bit more, or realize that could be the case. Or I guess companies have got options to look elsewhere, don't they?
Well, only so many options, right? When it comes to conventional ore processing in the United States, we are the only option.
Right, Mark. Well, I think I kind of probably asked as much as I want to ask on that side of things until kind of things start moving forward. Have you, so with the Alta Mesa deal, is that fully concluded and executed, money in the bank now?
Now, the money's not in the bank. We still have to close it. We've signed the binding agreements. It's my understanding that enCore has raised their funds. So, I think it's really down to the paperwork. We have to transfer the documents and get various approvals from some of the regulatory agencies. So it's really just the closing process. We're pointing to get it done before the end of the year. That's our goal. And so that's the path we're going down. So, I think it's certainly well advanced. And as I said, I couldn't be happier for Energy Fuels. And I also want to thank enCore, Paul Goranson, Bill Sheriff for pushing this forward to a successful conclusion.
Yeah, I think they're super pleased as well. So I think it has been a sort of a deal of equals, quite frankly. So congrats to both teams on that one. Obviously, market's starting to hot up again. Interest seems to be peaking again. A lot more inbound about uranium, I think, and obviously a lot more conversation about it with political narrative. Politicians freed up to talk about energy security using nuclear now. I think we're seeing mainstream press coverage, mainstream media coverage of nuclear energy as a solution to this energy crisis we all face globally at the moment. 2023 starting to look like a very interesting place. Supply way down. Seemingly the enriched uranium side of things, people are looking hard at. It's not going to happen overnight, but that's all good news. So broadly, it should be, we're hoping, cross fingers, and anything else, a good year for uranium next year.
We think it's going to be a good time for uranium and all critical elements. So, we're building the critical mineral hub, producing, recovering more elements than anybody else. So, as I said before, you typically invest in a uranium-only company or rare earths company or a vanadium company, but when you invest in Energy Fuels, you get all three of those. And that is absolutely unique to Energy Fuels. There really is no peer for us. We trade as a uranium company. The upside is to get more of these elements and really maximize our revenue going forward. And yeah, I agree with you. 2023 is going to be a very important year, but really looking forward to the future, Matt.